I'm trying to. Sorry, I didn't even know I was streaming. No. Wait. Anyway, good morning, everybody. It is a new day. It's coming about 9 o'clock. So preparations. I did wake up around 7, but I was meant to wake up at 6. I need to start setting my alarms because it's getting ridiculous almost. I went to bed just before 12, which was not planned. I was meant to go to bed at 1 and then wake up at 6. I was actually meant to go to bed at 3, but I went to lie down because I was so tired. And then my mom came, switched my light off, and in my head I'm like, no, don't switch off the light. And then bam, I was out. And then I woke up and I didn't set my alarms or anything. But anyway, we're back. It's 9 a.m. And yesterday I think we traded twice, so we lost both because we got the buyers wrong. On GU, we were entering sales. We believed that this area here, price shouldn't come above. It did. I believe price wanted to go down. It didn't. And we got the direction wrong. News, I don't think, played that much of an impact or had that much of an impact purely because it was neutral and it wasn't anything crazy. But today, we have not really much. I mean, we do technically have 11:30 a.m. news, and it is orange marked, which is medium impact. Although when a government body, not literally a government, is speaking, they, depending on what they say, can have a range of impact. So we have to be wary of that. It's at 11:30, which is about the time we want to start looking to close trades if you enter during London session. So we've now fully filled this daily fair value gap, as you can see here. This is now the order block territory. So I expect order flow from the larger time frames. We've also taken liquidity from Thursday, last week, Friday. We've taken both of those. And even today, we've taken up yesterday's liquidity. So I now believe price will go down. We've created a actually, no, we haven't because this is higher, but this is about to be a swing high, which the 4-hourly candle ends in an hour. Let's get rid of all these lines and not the daily fair value gap. Get rid of this as well. We've now fully filled this fair value gap in. I'm expecting price to go down. So if we go down to a smaller time frame, we should see. Sorry, the tabs are distracting me. We should now see, excuse me, what's happening. So Asia session. Sorry, still some things to get rid of. Wait, why is it still there? Perfect. So Asia session created this range here. London's taken its low. I believe New York may go to this area here, which is this fair value up on the 30-minute. Then I think it'll take it up higher to take out potentially London or Asia, maybe both, and then go down. But again, the main thing that I would say my mistake yesterday was we didn't really get that high impact news. Oh, you guys can't even see what I'm looking at. Sorry. Let me start that again. I don't know for how long you didn't see, but anyway. Asia created this range. London's taken out the low over here. New York could come down to this area, which is what I'm saying, to then run up to take some highs. I want to see some buy side liquidity being taken before I see a move downwards. Now, obviously, we've taken on the daily time frame 3 days of worth of liquidity in terms of buy side. So we can expect price to move downwards at any moment in time. That being said, though, I would expect some signs prior, like some liquidity to be taken on higher time frames, almost smaller time frames than the daily. Remember, we filled this in, so we now need that shift to the downside. Once we have that shift, we then look for the retracement. So it's pretty simple stuff, really. I don't really believe there's going to be much. EU is kind of consolidating. GU is the one that's mainly moving. It's been moving upwards, though. EU, sorry, has been moving upwards too, but not as much. I'll say consolidating from the fact that from the 18th of June, it's high, to the 24th of June, low. Within that range, price has pretty much stayed in between. That's not enough to say it's consolidating because it's not moving up and down, but it is moving sideways for the, like, kind of. Like, for me, this is consolidation. I don't really see this as a direction, but it's accumulating something, and it's an accumulating liquidity. And what's interesting is that when you see this sideways move, my personal experience, normally what follows is a big move afterwards. For example, here you can see we're moving upwards. I want to say we're consolidating. We had this one big move and then an accumulation of just orders, just up and down, up and down, up and down. and then bam, we get that big displacement to the downside. Pullback, continuation, pullback, continuation, pullback, continuation. Then we're getting this sideways move again, which is similar to this, and we'd expect price to then move downwards. Now we were a part, no, we weren't. We were a part of this initial move here. That was mainly because, again, look, consolidation, and then I think there's a 2-hour order block over here. Came up to it once, came down, came up to it again. I'm like, okay, this is going down for sure. Plus news, which is NFP, first Friday of the week. Bam. I closed a little bit early. Let's say we're going around here. Price then went like double the range. Then we kind of consolidated. Price was moving up. I was bearish in this whole period of time. And then finally price moved downwards. I don't think I caught this one, however. And now I'm expecting price to continue going down. And I'm also looking at price moving upwards. I think price will go down. I just need to know when. See how it went down here, went down here. That's kind of what we need to look for, because if you look at it on its own, it looks random, but there are signs. And a lot of the time, because I feel like I know that's what's going to happen, I can get in early. And in that, you then get in prematurely. And when you get in prematurely, you don't always guarantee a winning trade. So we need to be careful. We have lost 2 trades yesterday. So this time around, we want to win the trade. And to win the trade, we want to be careful and cautious. Not scared, careful and cautious, which is to follow what we're looking for and to the T. And what I analyzed from yesterday's mistakes would be that I was a bit too generous with my displacement. And I was even talking to myself about that yesterday, about how I need to improve on my strictness concerning displacement, what classifies as a displacement. And I was using the example of the swimming pool, that when the youth would have, or smaller kids would have, that swimming pool that they put out in their front lawn. If an elephant was to walk into that, when the water's filled up and there's nobody in there, of course, and then the elephant stomps in, there'll be a big sign. And if that elephant is on the path to success and it's leaving those traces of evidence, I'm going to follow those traces to acknowledge that, okay, the elephant was here. Once I acknowledge the elephant was there, I can then follow the elephant. But you need to know where the elephant is to be able to follow something, right? If you don't know where somebody is, how can you follow it? It's like trying to follow a car, but you're on your foot. It's going to be difficult, because a car, generally speaking, has to follow the speed limit. It can't go too slow at the pace of a walking pace in most of the roads. So as the car's driving, you will lose track of it. But if you know, you can eventually catch up to the car if you know where the car's going. So it's either you know the destination, and or you know where their footprints are. Obviously, a car doesn't literally leave footprints, but if you're in the snow and somebody is faster than you or farther away from you, and you want to catch up to them, but you can't see them, you follow their footprints. If you follow their footprints, you can then it will lead you to where they are, as long as they're not trying to, what's it called? Fake tracks. And so what does that mean? That means that in a market, there's footprints and there's also destination. Footprints are the displacement of price, where price shows that the institutions are involved, because they cannot, if they want to make money, they got to put in money. And if they're going to make the money that they're looking for, then they would cause the markets to show their hand, to show where they are. Not all the time, but most of the time. And because that evidence, we as smart traders, not smart money traders yet, smart traders would understand that retail is the prey and the predators are the institutions, and we are like humans and we get involved. It's like nature. Lions will feed on, let's say, I don't know, a giraffe or a gazelle. We are not the gazelles. Gazelles, they're looking for water, right? What the lion does is they let the gazelles get to water and they attack the gazelles. And then what does the lion now have? It now has a meal with a drink. So they get more money. But sometimes the gazelle gets away, which is why some retail traders can be profitable in the short term or can make money even. It's because the gazelles are, the girls that live are the ones that are lived or were allowed to live. The lion, which is the institutions, you could, as humans, see both. Once you acknowledge that there's a gazelle and a lion, I've never seen either in real life. I don't think I've seen. Yeah, I haven't seen either of those from my memory in real life. And so I now have the understanding that they exist. Once I now have the understanding and I'm open to it, I can see, okay, the gazelle, we don't want to copy the gazelle, but we want to know how the gazelles think. So we know where the lions are going to go, right? And then once the lion goes, we need to see the evidence of them eating the meal so that we can follow them. So I've used like 4 examples to explain like multiple different points. Eventually I'll get to do making videos, yes, but right now, no. And so as a smart trader, we want to follow the lion, but don't want to be too premature, because sometimes we may alert the gazelle, not literally alert the gazelle, but um, we may, if we go too early, see that the lion doesn't want to eat the gazelle yet. And the gazelle is, how do we see gazelle in the market? Because I'm saying lion gazelle, but what is that got to do with this graph? It's got nothing to do with it, right? But unless you replace it like this, gazelle being retail traders on the market looks like liquidity. Liquidity is above old highs and lows, more specifically equal highs. So this green line has this high here and this high here. A retail trader will see that as resistance. A lion or gazelle will see this as a place of security, a lake, right? So this is a lake. A lion looks at this and sees prey, but the lion also wants this water, but they've got to get to the gazelle first without alerting the gazelle. So the price will go up to this area. The gazelle will then get interested in this area because price is there at the lake. They'll start to feed on it, enter in their orders. The lion then attacks. They take the price up higher, taking them out of their stop, and that will now attract more gazelles. Why? Because then they will attract different types of gazelles, which are breakout traders. They get into the market, but that's actually bad because the lions now enter their orders, and the algorithm takes the price lower, right? So the gazelles that were initially in the market, because look, price was here, went down. Price came up here again, went down. Why would they not? Security, people see security as reputation, but security is more than reputation. It's a part of it, but if people are mathematically trying to be secure, if that makes sense, they're trying to place their security in places where the numbers seem to favor them, but a lot of the time there's somebody smarter than the smartest person you know, and people would manipulate price to where they will manipulate price to where you find it to be secure, and you would see a security, but it's in truth false security. What's false security? False security is where you place your faith and hopes in something that isn't really as secure as it seems. And that's the point I'm making about mathematically secure. People are placing security in their mathematics, but this is not mathematics. This is politics. Politics, sorry. Imagine a mathematician arguing a politician on a political matter. Now, they may be good with numbers, but a politician could be bad with numbers and still win the argument because it's politics, not maths. So it's not. There's no point in being mathematically secure. It's about being truly secure. Truly secure means you understand, because to be truly you need truth, right? If I'm truly something, there has to be truth involved. If I'm truly asleep, it means I can't be pretending I'm asleep, because then I'm untruly asleep. Truly, you need truth. So to be truly secure, you need the truth about the markets. You need to understand the markets for what they really are, and then you can find security because you find it in truth. Anytime there's false security is when you have security in a lie. A lie is not necessarily a lie altogether, but it could also be part lie. As long as there's not full truth, you mix truth with lie, it becomes a lie. You add 99% truth, 1% lie, it's a lie. A lie is a blemish. It's like having a white garment and then having a grey dot as a stain. No matter how much whiteness the white is, if you add a blemish, a color, it could be grey, a wine strain, orange zest, anything that's a color, it will damage the garment. It may not be visible, but it will not be purely white. It won't be truly white. It'll be white, but not truly white. Now, why am I saying all these things? Well, I'm saying it for, I'll say, three main reasons. One, for my own personal reasons. Sometimes it's good to voice out thoughts because we think so many different things that if you leave some ideas as a thought, most of people's thoughts die, because I think scientists say we think how many thoughts a second or a minute? Loads, right? Hundreds of thoughts, thousands of thoughts in a given space of a day. Most of those thoughts are not actualized or manifested, right? So if we leave our good ideas in a place of a thought, it may go to where most of our thoughts go, which is death, right? Because we don't do anything about it. Not to say thoughts aren't important. They are important because every idea comes from a thought. Every good idea comes from a thought. So we want to establish our ideas outside and more than a thought. Speaking is powerful, right? So that's point number one. Point number two is because of yesterday, mistakes I made yesterday. I am talking in the areas of reminding myself in visual representation, also known as allegories or metaphors, which are basically me applying physical examples to what I'm already doing. It will help me explain it to somebody else. And if I can explain it to a toddler, then I can explain it to, well, if I can explain it to somebody that has less understanding than me, then it gives me a place of understanding. I guarantee you. The best way you know you've learned something is if you can teach it. All right, so that's two things. And the third reason is for you guys as well, that you can also understand what I'm seeing and saying in the way I'm saying it. Point one and two, they're all kind of linked together. But because of point one, which is to establish my thoughts, I'm thinking something, I want to deliver it to you guys who are listening, and also as history. How would I be able to explain my thoughts when sometimes I'm thinking in images, or I'm thinking with terminology I don't yet have? I will just explain it as I see it, which is visual representation. So those are the three reasons why I'm waffling, basically. So what I'm waiting for today is we need some buy side liquidity taken. I believe price wants to go down, and we're waiting for the go ahead. And we were bearish yesterday prematurely, but that's fine. We're gonna get some of those wrong. For us to be bearish, it would mean that we're bullish on, or bearish on GU means we're bullish on DXY. We've tagged into this weekly fair value gap. Yes, there is a daily fair value gap here. I can see it, but I have not analyzed it because I don't want my chart to be messy. And I see prices tagged in, and there's also a daily fair value gap here as well within this weekly fair value gap. And we've tagged in, and normally this next week, which is this week, I'd expect a reaction to the upside. And the reason why is because we have this target here, which is this old high. And then we also have, to be fair, we've actually, this fair value gap was what I was going to mention, but we've tagged into that yesterday. But I believe price wants to go higher. Now, if it closes above this high, we are bullish for sure. And hopefully we get that if we are looking for buys. So, I mean, there's not really much movement. I think it's going to be a New York delivery session again. I will potentially go live again like yesterday. I prefer the going live when there's something to show kind of a thing. Like I will always go live at least once a day, no matter what. But to always go live at least when there's something to show for now. And then as I improve, I can then start delivering consistently, a consistent schedule where it'll be an hour open London session and maybe another 2 hours at New York delivery open session open rather. And I can start getting to that consistency. So I'm reliable. You know when I'm live every day, rather than me going live. But my live now is more so, it's not, I don't want to say that. It's like it's like a flare. Let's use that word instead. It's like a flare signal to attention, to bring attention to the market that maybe something's about to happen. So when you see me go live, it's more of a, oh my gosh, wait, the markets might be moving, rather than oh, let's see the live today, let's see what he has to say. It's like a siren. It's like a, let's look at the market together. Not that we're going to make money, not that we're going to enter the markets, because sometimes I go live and I don't see anything. But it's a cause to be attentive, or a call to be attentive. Okay, so yeah, I mean, I don't see anything. I'm going to be very honest, don't see a thing at all. So I'm going to end stream, and then we'll be back potentially New York Open. Stay tuned on the Telegram. We always post all of our ideas, and yeah, that's pretty much it. And I've also got stop loss hit here as well. We put that in, and then we will go again. Very simple. And I'll see you guys tomorrow. Later today or tomorrow. It's me and boy CJ at sea, and peace.